Jonathan Barratt. He's Managing Director of Commodity Broking Services. He's he's on camera for us there, telling us how and where prices are going to head next. What's going to be the most important bit of data for commodities markets as a whole this week, Jonathan?
I think when we really start looking at Wednesday, then Thursday. Thursday is obviously the CPI out of the States, producer prices on Wednesday. In my mind, it's just it's a focus on, I guess, whether we've got any inflation out there, which in my mind will be a positive sign, obviously a positive sign for the economics there, because any sign of price movement to the top side has got to be generally positive, and I think positive for an outlook there on some of our precious metals, particularly gold.
Yeah, let's just pick up on gold. I mean, could you believe we went over $1,800 the ounce last week? And, you know, such a move so quickly gets a lot of people nervous.
It certainly does. The other thing is that there was a rash of buying that actually came to the market so quickly. When you look at where the ETFs and the surge in the ETF markets, I think, indicated that people were so unsure as to what was happening at that particular stage that there was just this flight to quality, flight to safe haven, flight to gold. And that obviously caused that move up through that 1,800. I think at the moment, though, the market's sort of taking a step back. Too fast, too far. Was in fact, I think, the cry of some of our traders. But when we look at it at the moment, it perhaps is still too high at the moment. And I think the interesting thing here is the consolidation pattern that we hit between that 1760 and 1720 as to whether or not that'll hold. And I think at the moment, I'm still thinking that it's just a bit too high.
Yeah, would you be shorting it?
We took on a sneaky short last week, just because we did think it was too high. I think you can have a look at going shorting prior to the figures out on Thursday, because I feel that there it can sort of head down to that 1,700 level. As to whether or not I think it'll stay, really will depend on what the equity markets do, because a lot of people moved in quite quickly. If the equity markets start to pick up, then I think people will switch out of their gold positions and back into the equities. So I think really, let's see what the equities do. If that's the case, then I think gold will come under pressure, and I think back to about 1,700 would probably be where my money would be at the moment.
Right, let's talk a little bit about some of the base metals as well. What's the key story there right now? Because there's more and more talk of there being a global slowdown, and of course that would affect demand quite considerably.
Well, you're dead right. When you look at what's happening in the copper market, a lot of people are suggesting that we are seeing that slowdown. I think one of the interesting things for me was, in fact, that China's imports for last month was up 9.5%. Now, although overall for the year that figure is quite negative, it's been quite negative, this number is saying that imports were actually up. In my mind, was quite positive. In fact, I think we've actually reached a level for the copper market that we have a very good balance. And I think now that China's sort of starting to see that slowdown. I think they went through a period of destocking, but now I think they're coming back to the market. There was sort of a couple of orders that we saw last week that suggested that they are back into the market. So I think we're at an intermediate low here for the price of copper, and I think throughout the week we'll probably see prices increase.
Jonathan, just also getting your view as to what happens with oil as well. Another ratchet down last week with that. So, you know, is it the same story?
Look, I think crude is slightly different, and I think one of the main things this week that I'm going to focus on, I'm going to focus a little bit more on what's happened in Libya. Now, we're focused on all these other things last week, you know, the European and the debt, but remember we've got about 1.5 million barrels that will come back online if, in fact, that Libyan situation is solved. Now, just remember, look at the Brent and the West Texas spread. That's very, very wide at the moment. So if we do get a situation developing where we can see an end to what's happening in Libya, I think you'll find that spread will come in quite quickly. So basically that's selling Brent, buying WTI. I think that's probably the safest bet at the moment. At the moment, in terms of WTI, I've actually liked the dip and continue to like the dip on the oil market.
Is there a price that you see that OPEC comes in and starts to cut production at?
Look, I generally think between 85 and 80, that's where we've found solid support. I think if it comes sub 80, then you'll start to see a little bit of persuasion in the market. Because remember, it's a different set now with OPEC and the rest of the world, mainly because they've got more loans on their books, so they've really got to protect that area below 80. I actually think it's sort of it's square at the moment, but if we do get prices that retreat lower than that, then I think they'll come up and then look to change the status quo.
Jonathan, great to have you on the programme. As ever, Jonathan Barratt there joining us from Sydney. He works at, he's MD at Commodity Broking Services.